Hello, this is Rob from Sovrun, where we make the complex world of finance simple. Today, we're finding the market's fair price using a tool the pros call VWAP. Imagine it's early 2025. Big institutions are moving hundreds of millions into AI stocks without moving the price an inch. How? They aren't just buying, they're hiding, quote unquote, their orders in the daily trading volume. VWAP stands for volume weighted average price. Think of it like calculating the average cost of gas for a fleet of trucks. You don't just average the price per gallon. You weight it by how many gallons each truck actually pumped at those prices. It's the true average price of the day. Here's how the math works. We take every trade's price, multiply it by the number of shares, and then divide that total value by the total volume. For example, if we buy 100 shares at $10 and 500 at 10.10 and 200 at 10.05, the math gives us a weighted average of $10.07. It's like helping a friend with homework, step by step until we find the fair value. We use this as a benchmark to see if we out-traded the market. If the market price is $150, but the VWAP is at 152, buying below that line means you got a better deal than the average person trading that day. In 2024, a giant pension fund bought 2 million shares of Apple. Instead of one big buy that would crash the market, they used a VWAP algorithm to break it into thousands of tiny dots over 6 hours. They saved $240,000 in slippage alone. Why does it matter? Because VWAP is the fair value line. A common misconception is that it predicts where the price is going. It doesn't. It tells you if you got a fair deal right now. The key takeaway? Institutions buy below it and sell above it. You'll find this concept in supply chains and even real estate. It's all about focusing on what actually carries the most weight. Follow Sovrun for more financial insights.